Hi guys, this is Young Neil from Advanced Property Strategies, and in today's podcast interview with Nathan Belling, we're going to be talking about the difference between commercial property, mini boarding houses, as well as NDIS properties, right? These are potentially high yield investment strategies that most people can enter. So he's going to be talking about the pluses and minuses of each. And as part of this Your Next Property Deal interview, you're going to learn about how he's got into them, how he created a monster business that he sold off and is able to ongoingly buy these investment properties. So stay tuned and check it out. Hi guys, this is Young Neil from Advanced Property Strategies, and welcome to this week's podcast, the Your Next Property Deal podcast, and we're talking about rooming accommodation, multiple sources of income, passive income, all that good stuff. And today we're even going to touch on commercial property and NDIS. So I've got as our guest speaker, Nathan Belling. G'day, Nathan. How you going?
And Young, very well, thank you.
That's good. And Nathan has dipped his toe in the water with a handful of these, a little bit more than dipped his toe in the water. He's got a handful of holdings in commercial property, NDIS, mini boarding house as well. So we're going to talk about that. I'm looking forward to hearing about your experiences on those, mate.
Excellent.
Yeah. So, but before we delve into that, I know Nathan started young. He was running businesses as a kid or doing paper runs or doing cool things. But I want to hear, Nathan, if you want to just share with people, obviously, to get to this point, you've done some cool things, but start at the beginning. So people who, wanting to get into property may get some inspiration on your overall business journey, not just your investments.
Yeah. So I started young. I was washing neighbours' cars from probably the age of 11 or 12.
Yes.
Had my little paper round sorted out.
Yes.
By the age of sort of 14, I think in my last year of school, year 12, I was working 35 hours a week.
Wow.
How and going to school full time. I don't think I did. So, so
that's good.
It's I don't recommend it for anyone, to be honest.
Yeah. Wow.
But
cool.
It was, I had a drive, just I love working. I love love making money. And that's probably the real drive. But I guess my career has been, I've spent 20 years in IT or in the IT industry.
Yes.
So I did a university degree. So early 20s, I went to university and learned this thing called IT. The interesting part of the story was I actually didn't want to do IT. I wanted to do property economics. So I've loved property for years. Yeah. Except my grades weren't good enough to do property economics because I spent too much time working and not focusing on grades. So
interesting. I didn't know that.
The enrollment officer said to me, well, why don't you consider this IT thing? Do that for a semester, get some good grades, and you can transfer across.
That's right.
First, what do you call it? First tutorial, I met my now wife. And I ended up doing a 3-year IT degree.
You got hooked.
So I got hooked one way or another.
One way or another, that's right.
I worked for Queensland Police for a number of years. I worked for another IT consultancy for following on from that. All in IT. Worked my way out of the technical side of IT into project management and sales. And then in 2013, when my wife was 6 months pregnant with my second child, I decided to give away the PAYG job and start my own IT consultancy business. So I took all the money out of our offset account, just as Jody, my wife, was heading onto maternity leave, and started this business. So I ended up growing that. So from 2013 to 2021, I grew that to around about $12 million in revenue a year. We had 45 staff across Queensland and Victoria. And then in early 2021, I sold it to a Dutch company. So a Dutch-based private equity firm purchased it. So, which gave me a really large settlement, which I guess rewarded me for the previous, call it 25 years of work.
Yeah, for sure. Yeah, awesome. And are you really, really happy that you sold the business? No regrets at all?
None at all. No. It was always a plan. It was always a plan.
Yeah. And I think that's part of being in the property journey or any business journey is you need an exit and you need to have a plan. And some people's their plans can be a bit ambitious for their abilities, as I talk about balancing the ambition and the abilities there. But at the same time, you do need an exit plan, whether it's your portfolio, whether it is a development, whether it's a business, right? Because and even a buy and hold is in some ways an exit too, where you park your money and hold your wealth to do that. So that's really cool there. And so what are some of the biggest learnings during that journey? I know it was a bigger journey of building that business and selling it for a substantial amount there. What are just a couple of the lessons there that you have been able to apply to your current property journey?
I guess the general premise that I apply to business, when anyone asks me what's your top tip, my top tip is always to spend less than you earn. So
Yes.
In business, in life, in general, if you do that, then you'll come out ahead.
Yeah.
But the other side of that is that it's really persistence. So if you do have that clear vision, that clear purpose, and then persisting through seeing that through. So there'll be many days in the week where it tries to throw you off course. Yes. And it's quite easy to put your hands up and pull the dirt over your head. Yeah. But if you don't persist through, then how could you ever expect to achieve that vision?
Yeah, absolutely. And look, my take on that is think big and start small. And if you want to do a development of 50 lots, 100 lots, 1,000 lots, you got to just think big, start small with the smaller ones, progress your way up. As I'm sure, like you said, with your business and selling it, having that $12 million in revenue, you didn't start that. You didn't just buy a business with that. You started off with 50 grand and then 100 grand and 500 grand, $1 million and compounding that, right? So because as the businesses or the projects grow in size, they'll also grow in challenges, cash flow challenges, staffing challenges, personnel challenges. It does multiply. So currently, let's transition forward so that people understand that this is not a battler from the bush necessarily story from a property investment point of view. You've got a substantial amount of capital. So you're doing property development as well as investing in property. So let's talk about the property development space. Generally, you're doing a handful of subdivisions. Just talk about why you like that and what's your focus currently?
Yeah, so I guess why I like the property development side of it is it gives me the ability to manufacture some more immediate equity or more immediate cash flow or more immediate capital, as opposed to other strategies such as buy and hold. So I get to then divert those profits off into assets that allow me to hold them longer term, which throw off really positive cash flow. And that more or less gives me a stable base that from this point forward that I've got that positive cash flow coming in. So without actually exchanging that for effort. So if I choose to not work the second half of the year, that portfolio continues to grow, continues to reward me. And then when I come back to work, it's I can continue on.
Yeah, exactly. And I think one of the good ways where I learned that as a younger investor was through the game Cash Flow 101. Some people may have heard that through Robert Kiyosaki's book, Rich Dad, Poor Dad, and you can buy it online. There's Cash Flow 101 game and Cash Flow for Kids and Cash Flow 202 there. Where you learn to build capital and then pump it into cash flow, build capital and pump it into cash flow. And look, cash flow is where the lucrative passive income comes in from, let's say, commercial buildings, investment properties, boarding houses, and the like. But you need that capital to pump it in. Otherwise, if you just gear up with debt, you can be quite exposed to interest rate changes and fluctuations. So, so tell us about, some of the positive and negative experiences that you've had in the last 3-5 years of just general property, whether it's development, investment, anything that you want to share for beginners, especially to appreciate that the journey for you is still a learning curve. Just because you've made X amount of millions of dollars in business doesn't mean the learning stops and you don't experience challenges.
Yeah, so I guess the positives out of property in general is really the returns that are achievable. Yeah. Really that feeling you get when something's increased in value. So you've sat on it for a little while and it's actually increased in value without you doing something, or you've done something and it's increased in value.
Yes.
I find another positive around property in general is just the control you have. So
Yes.
so not in necessarily as in the control of the asset, but the control in how you treat that asset. So
Yeah.
you could subdivide it, you could build on it, you could sell it, you could rent it, you can. So there's a lot more control there as opposed to other investment strategies such as investing in companies on the stock exchange, where really
Yes.
you are just a passive player in that. But
Mm.
with I guess with positives, there's always negatives. So the negatives are really there's the bigger you play or the harder you play, the higher the risk is. So there's deals that I've done where I've lost money. And that's a kick in the guts. So, but you have to balance that out with the with the ones which are really positive.
Yeah.
Interest rates and the I guess the media hype around what the interest rates are and how that plays into the property equation, especially when it plays out on the negative. So the other big negative I see at the moment, or not at the moment actually in general, is really how government is affecting property. So their decisions around, or lack of decisions, I guess. Given that we are in a housing crisis right now, but there's not a lot the government is doing to solve that problem in a broad scale. So there's a lot of talk, but not a lot of action. So there's some negatives, and conversely, there's the positives there.
Yeah, it's one of those things that can be frustrating, and I whinge complain to my girls who are 11 and 15, and in some ways they get it because they have been raised in a property context. But yeah, they talked about the Queensland Housing Summit having 2 of those and what's come of it. And it's also political. It's also political that, we'll go spend 2.7 billion on a new stadium that we'll probably use a handful of times in that 2-week period. But what else can you do? And throwing money at things doesn't always solve the problem. Like I think legislation is a big thing, but it's so political. The not in my backyard philosophy that general Queenslanders or Brisbane people have, I think is quite toxic, because they want houses, but at the same time don't put it in my backyard. And I get it. I completely get it. When you're living in a city or in suburbia, you don't want that density, but at the same time, you've got family members who can't have a place to sleep. So it's one of those things that you can whinge and complain about all day, every day, but at the same time, you've got to get on with it and create some solutions, which is what you and I are good at, right? Creating housing, creating solutions. So let's start talking about the where we started, about the multiple income properties. And the reason I chose to interview you, Nathan, is because you're not just an advocate for mini boarding houses or rooming accommodation. We've had Sue Hannay, who I've interviewed prior to you, and she's just gung-ho on this particular model in Brisbane City Council, build a house, 5 tenants, which is great. However, you've got more of a diversified portfolio, obviously a bit more cash and financial resources to play with. So why, you've got commercial property, you've got NDIS, you've got rooming accommodation. So do you want to talk about the pros and the cons of one against the other? I'm not sure where you want to start because it's a bit of a broad base, but whatever you feel like. Yeah.
I guess so for me, I do have those, I guess, 3 legs in 3 different camps there. And it's not through lack of confidence in one of those sectors. It's more about spreading that risk around.
Yes.
Which then allows me to play in each of those sectors and then work out which one I want to actually really play in. Yes. So then I can double down in one of those specific sectors at that point in time. Yeah. So commercial property for me, it's like it's a higher entry point to achieve that stable return. So you can pick up a commercial property for under $1 million, but you're generally not going to have a quality. You may or may not have a quality tenant. Yes. May or may not have a long lease in place. So generally, I see the commercial property as that higher entry point. So probably the $2 to $5 million mark to achieve that a good tenant on a longer lease, so that then it is literally a set and forget. I love commercial property in that every bill that I receive, I get to pass back to the tenants.
Yes.
Land tax is no longer a problem.
Wow.
Because the tenant pays insurance, the tenant pays water, the tenant pays rates, the tenant pays. So it's a true, I guess, net return. And then you just play around with what level you're comfortable with gearing. at. So if you gear at a sensible, a sensible level of that 50 to 60%, then it does throw off some really good passive income that it is a set to get for maybe 5 years. So that's the commercial property. The boarding houses, different. Again, it's the entry or the right to play or the cost to play is lower.
Yes.
So and then it just depends on how big a game you want to play. So I love the boarding house in that you can build them. Relatively, I sort of allow for 12 to 18 months. I think that time frame is coming down a little bit now, as the builders sort of get a handle on what their workload looks like. But they're really easy to tenant. They're proven concepts, especially in Brisbane City Council. They're easy to get into, and they're also now easier to get out of. So with some proven exit strategies there around
from a sale point of view.
A sale point of view. So so that's great, but you do have that risk around the tenant. And I don't mean necessarily the rent side of it, but I mean the damage to the property. So and the cost to maintain that property is going to be higher because you have no way of recouping those costs unless it's negligence from the tenant. But there's natural wear and tear on that building that you need to equate over a period of time that to eventual replacement or refurbishment.
Sure.
And then looking at probably, and I would say this is probably the most risky of those three strategies, and that's in the disability housing or the NDIS space. There's a lot of people playing in it. There's a lot of people thinking they're playing in it. There's a lot of speculation in it, but there is a higher return overall. So I can achieve a higher return out of the disability housing than commercial property, and also the mini boarding houses as well. But the risk is higher. So the way I approach that is, well, how do you reduce risk? So the best way to reduce risk is just remove assumptions. So vacancy is a big risk in that space. So how do I remove that? Relationships with care providers, relationships with participants. It's really about just removing all those assumptions. The social good part of it is really good, like the building houses for disabled people that are coming out of nursing homes, aged care facilities, hospitals. That's really, it's great great socially. It's a great social story. You're also backed by the government with the rent that you will receive, which is indexed for inflation for the next 20 years. So there is there are some really positives around that space, but it's not for everyone. And I would challenge anyone seriously that is thinking about it, just purely from a cash flow perspective, because there's a lot of risk in that sector.
Yeah, sure. Yeah, I've looked into myself, and when I was talking to NDISP John Johnson there, he did say that high risk, high return, and I'm glad he just set me straight on that. And I'm doing enough high risk stuff with my land sub without exposing myself to a higher return from a rental point of view. And like you said, that the rental point of view, you're outlaying that capital, so I offset my higher risk with my lower risk mini boarding house play there. So which is really exciting. Everybody has their own ways of managing risk, and it's not necessarily all about growing, it's consolidating as well. So now that with your two NDIS that you've got on the north side of Brisbane here, and you've got another south side Gold Coast NDIS there, what is your next acquisition in terms of these three in your portfolio? Would you say that you have the most inclination to? And I know I'm not asking you to commit to it. I'm just saying, obviously, you're a forward planner. You're always thinking, okay, what's the next 12 months? What are my goals going to be? Is it going to be the disability high yield stuff? Is it going to be the mini boarding house, lower yield but lower risk stuff? Or is it going to be commercial property? What's your verdict as of 2023?
2023 verdict. I'm looking forward to replaying this back to myself by 2032. But the goal I've set for myself is to have 30 of the NDIS properties. I accumulate those over the next few years.
Yes.
So now we're proving the concept. We've got two houses that are really close near to completion. They're probably about a month out.
Yes.
We're looking to acquire at the moment in New South Wales. and we've also got a site at Southport in the Gold Coast that's coming, hopefully come out of the ground in the next few months. So
yes.
I'm really comfortable putting the foot down in this sector now that I've again removed a lot of the risk or confirmed a lot of the assumptions.
Yes.
Having said that, I'm building 2 more boarding houses at the moment on the south side of Brisbane, predominantly because of the land, the challenge with selling land at the moment in Brisbane. So that was just a pivot of strategy. The room and accommodation works on the site. It's a good return and good capital uplift as well once they're completed. So fast forward those few years, I think the focus will be around the NDIS properties, but there'll be a smattering of the others in there.
Yeah, for sure. Look, and I think, like I said to Sue, that in terms of those mini boarding houses you're building to sell potentially there, that is an advantage to that. And do you think there's an opportunity potentially to sell with the NDIS properties as well?
Look, there absolutely is. So, and there's a number of people out there doing that now that are packaging them up, getting some yield compression and selling them to an industry fund. So that model is proven. The rate of return is quite good by just doing that. But the longer term play for me is around that passive income. So it's more around building them, removing your capital through refinancing, which allows you then to accumulate more, hold that for that. Potentially in this scenario, if you build them to sell, you need to sell them within 2 years. Is my view. Because the government's guaranteed to pay you for the next 20. So if you sell them at the 10-year mark, then you've only got 10 years of guaranteed income out of them. So my view is that you're better to sell them at early in the journey, so that there's enough meat on the bones left for the acquirer.
From a depreciation point of view, it's hot, it's sexy as well, and they can have a bright future of 18, 19 years of, if not more, of rental uplift and CPI compounding, all that good stuff. So, So in terms of, let's just go back to the mini boarding house stuff and your experience with that. In terms of financing and oversupply, do you think financing is reasonably easy to get, and do you think that oversupply of these is going to occur or not really?
I think there will be oversupply in some areas. So, and it's generally where the land is the cheapest. Because the renting, what we're seeing is that they're renting very similar amounts. The return is very similar in terms of a rental return. Doesn't matter what area you're in.
That's right.
And plus or minus 10% is really not that great a return when you compare it to, for example, a 4-bedroom house in either location. So there is always that potential for that oversupply in those areas where they are building a lot of them. Especially when you drive down a street and that's all literally every knockdown rebuild is a mini boarding house. We
talked about that with Brendan Brooks.
So that part that to me would be scary, as in because it still comes to demand and supply. So if you have a tenant that's living in a 3-year-old mini boarding house and the brand new one comes up next to it, and they for an extra $10 a week, they'll probably move because it's quite a transient play. So just be prepared. Be prepared for that. How do you protect against that? Just pay a little bit more to be in a different location.
No, that's it. Look, I think it's quite interesting. I think that as much as this concept is great, I think from an oversupply point of view, I think it'll be smatterings. Like let's say you built 10 in one suburb, it's very, very unlikely they'll be on the same street unless they're done by the same developer who's done a 10-lot subdivision. I do find that it's more the ones into twos that people are doing, the subdivisions, and they're building 2 at a time, maybe. Like I'm about to build one next to an existing one that's 2-story. You couldn't even tell that it's a rooming accommodation building because it's a 2-story double lock-up garage at the front. With mine, you probably will be able to tell. Maybe not, depending. Maybe because we're in the industry, you can go, "Yep, that's one and Young's pretty compact." But in finishing up, in terms of philanthropy, like I know that you've spent a fair bit of energy now diverting. I won't say diverting, so pivoting and focusing and finding a charity that you can believe in, give your energy to, as well as market with your branding. What's your thoughts on that, and what's your aims with this philanthropy and charity work?
It's I'll probably bring it back to that, the purpose that you should have a purpose, and multiple purposes or multiple visions in all areas of your life. So one of those, one of the core purposes around the philanthropy angle for me is specifically around, I have a personal belief that no child should go into a classroom having not had a nourishing breakfast. So I put in a lot of effort and resources in around how to fund that program and fund that program into the future through Food Bank Queensland. So that in itself brings a whole heap of different ways to think as well. So it's not just about donation of money, but it's about how a charity works, how they're the most efficient with that money as well, and how I can influence that so that it stays well after I've left this earth. So it's not just about a one-off donation I make annually. It's about actually enacting a change, enacting something that I have the resources, the skill, and the persistence to see through.
Yeah. So it sounds to me like what you're saying is creating a passive income portfolio. Let's say it allows you to donate, not let's just say a once-off $1 million, but let's say $100,000 a year, every year. Pick a number, whatever it is. It's just perpetual. And then if the future you choose to either create your own charity or divert those funds to another charity, it's going to be perpetual, year in, year out. And whether you're around or not, and your grandkids can still contribute to that charity if that's something that they want to do. Is that kind of the theme that you want, like a perpetual contribution?
Yeah, correct. Yeah, that's right. Where it's not, and no, it's not optional for the grandkids. Like, it's not optional. So so we can set it up in ways that that is set up so that it's not, and it may not necessarily be my assets that are giving the return. It could be something that I've set up within the charity in my lifetime that provides that ongoing return. So, but at the same token, you get to meet some amazing people through the journey, and hear some amazing stories and see the impact you're actually making.
Yes. Yeah. Any stories that you want to share just off the top of your head there?
Oh, look, nothing off the top of my head, but it's probably just seen us as individuals hang around like with similar people. So I hang around with other business owners, with other property developers, so people of similar interests, and that's who you generally hang around with. So being able to put yourself outside of that to someone that is actually disadvantaged, that that doesn't have the resources to put food on the table tonight. Like to actually see that and to hear those stories is quite touching. I went and volunteered a couple of weeks ago in a kitchen that prepares those meals. So it was fantastic. I got to pack boxes for half a day. Like, it sounds menial, but it actually makes an impact. So it's also very grounding as well.
Yeah, it can be very, very rewarding, isn't it? It's kind of, in some ways, it's solving a short-term problem. Whereas if you're looking at housing, it's very much a longer-term problem to put someone in housing, other than giving them a tent or a bed in your house, which may or may not work because of safety reasons or whatever. You can feed somebody tonight. You can feed someone now with a small contribution. In terms of housing, it's a 3 to 5 year time frame to be able to solve that problem, and there's a lot of red tape, a lot of capital, a lot of market fluctuations you have to put up with and risk, whereas being able to provide that short-term solution, i.e. have there, at least get them fed tonight, can really impact you positively and help you build just that confidence that you're making a difference to people, isn't it?
Absolutely.
Yeah. Very good, Nate. Look, any other tips for budding investors? Not everybody's going to go out there and build a business necessarily and sell it for big dollars and invest the way you have. I'm sure there will be some, but vast majority of people listening to this podcast will be beginners wanting to get into their first or second investment property. Any just little tips to get into a multi-income property, passive income property, whether it's commercial, NDIS, or mini boarding house? Any tips there?
Look, the real tip from me is just to give something a go.
Yeah. Yep.
So the thing that I hear time and time again is we're developing our strategy. We're developing our strategy. We're developing our strategy.
Yes.
So that's great, but all about developing a strategy is actually also executing.
Yeah.
So that doesn't
take
mean
action.
that you take action. It doesn't mean that you need to go and put yourself and your family at a whole heap of risk. It could mean just partnering with someone. And I'm not talking in a capital sense, but just partnering in a way where you can get some knowledge out of that, trying that strategy. The other key thing for me, and this is something that I've learned over the last 6 months, is just remove those assumptions. So if you assume you're going to do something, or if you assume something's going to cost this much, or you assume you sell something for this much, qualify those assumptions.
Yes.
As soon as those assumptions get tested, it gives you confidence to either go ahead, move forward, or actually not.
Yeah. Look, for sure. Like when we've been talking about the rental crisis on the news, it's all over the news for months and months and months. And then I was renting out my mini boarding house there, and I assumed we were getting X amount of rent, and I was wrong. We got a whole bunch more, and from that I thought, yep, let's go buy a couple more blocks of dirt and build a couple more mini boarding houses. So based on the actual facts and the feedback, then you can, take some further action. So exactly, mate. Yeah. Just taking the theory out of it and making a reality, and whether it's a plus or minus, taking action.
Yep.
Beautiful. Look, thanks, Nathan. Appreciate your time and hope everybody's got some value from this interview, mate. Appreciate you again, and we'll catch up with you very soon. Hey.
Thanks, John.
Hey guys, and hopefully you enjoyed that interview with Nathan Belling, who is a property multi-millionaire. As I mentioned in the interview, he created a multi-million-dollar business, sold it off, and now he's buying commercial properties, NDIS properties, as well as mini boarding houses. So as your next deal interviewer, I was able to extract a whole bunch of information, which I hope you really enjoyed, including, what actions should you take as a beginner investor, and which is better for you? Is it a commercial property? Is it an NDIS property? Or is it a rooming accommodation mini boarding house? So hopefully you enjoyed that. And if you've got any questions, go to our Facebook group now, Your Next Property Deal, and join the group and ask any questions that you want. We'll catch up with you soon. Till next time, this is Young Your Advanced Property Strategies. Catch you later.